expectations. We've got PCE inflation coming out tomorrow. That's the Federal Reserve's preferred gauge of inflation. And then on Friday, we get CPI. What we see from the Iran war, those numbers.
We need all hostiles down. Move out and
the show
mop up.
tomorrow and Friday to find out. Shifting gears a little bit to the AI bubble, my favorite topic. Bloomberg was out with a piece yesterday. Incredible. Get this. Bloomberg. Positive potential that just made spending by hyperscale could go down as one of the greatest misallocations of capital in history. Bloomberg, right? We need to put this on, right? Bloomberg is not wearing a oil hat. This is not a Twitter random saying this. This is freaking Bloomberg. Where have you been for the last 3 years? Bloomberg, once again, nobody. Even as that is being said, we've got PIMCO saying misallocate some more capital because PIMCO is currently weighing a $14 billion private credit deal. It's a local data center in Michigan, one that Oracle's ahead of the time raising the price. Remember last year when all these data centers went out, the crazy conspiracy theorists, randos were saying, hey, but Oracle doesn't have the money for this, and everybody was like, it doesn't matter, just buy the stocks. Here we are half a year later.
Explosive
trying to figure out who pays for it. Guys, we got a lot to talk about this morning. Why don't we spend time in melon of ahead and let what's going on? We hit the right button first. Then let's see what's going on in the world of finance. Don't forget that like button. And then subscribe to come back and have your coffee with the melon head markets. Right now, the S&P 500, it is ripping higher, 175 points in the green this morning, 2.6% to the upside. Almost all of the losses from the now been reversed. We're down, up 1,253 points, almost 2.7% higher on the news of the ceasefire, not the actual cessation of fire, mind you. And the NASDAQ ripping here, tech stocks, 820 higher. In the green for the NASDAQ this morning. Stocks are just above. Meanwhile, the dollar is getting clobbered this morning, down 100 basis points, 98.66 for the DXY. This is really oil prices driving this, guys. As oil prices rip on the Iran war, remember, traded in dollars. Despite what the price guys said the day out, not the net dollar. Still has keep going. Dollars is still what you need to trade oil. Well, people will need dollars. So we're seeing quite a beating on this news this morning. Looking over at the bond market, we have got bond yields are down sharply. Now, this is interesting also because typically bonds, particularly long-duration bonds, is a safe haven asset. When you see people piling into long-duration bonds, it usually means there's some kind of calamity elsewhere in the markets, and that's why people are buying bonds. That is not today. This is not safe haven demand.
Contact! Hostile troops sighted!
Sell the dollar and buy everything, including U.S. Treasuries. The 30-year yield is at 4.842%, down almost 8 basis points. The 10-year yield down 11.5 points, 4.229, now 4.23. The 2-year yield 3.738%, that's down by 9.5 basis points.
I need some ammo. Who's got
And the
spares?
1 month is at 3.642, down almost 1 point. A lot of bond buying. Even Bitcoin getting bought this morning. Now, right now, they're putting in a little candle. That's because the cutoff was...
Need ammo, I'm fucking dry!
Bitcoin saw close to its game yesterday in the immediate aftermath when it rose about $3,000 per coin. Currently sitting just below $72.
I need fucking ammo!
$9.44
Thanks,
at
soldier.
price on Coinbase.
Appreciate it!
Looking at the commodity commodities today also. Right off the top, gold is ripping here.
Hang in there!
4,800 an ounce for spot gold at 47.98. That's up by $92 or almost 2% higher. June gold futures are at 48.24, higher by $138, 3% higher. Silver is getting in on the buying too, 77.36, higher by $4.37, or about 6% higher. May COMEX silver futures 77.56, higher by 7.3%. Again, this is interesting. Typically, gold and silver are safe haven assets, and people run to them during times of calamity. That's not what's happening. We've got good news today, and people are probably why? Because of that weak dollar, right? The dollar is the denominator in price, so a weak dollar is better for gold, and that decline in interest rates. Big drops in the long-duration U.S. Treasuries, which typically Treasuries are competition for gold and silver. As those yields fall, that makes gold more attractive. And so we've got gold and silver are ripping here, even though this is not really a time when we expect to see a lot of safe haven demand. So interesting price action going on in the precious metals this morning. Copper is 3.6%. Platinum and palladium both ripping. We've got platinum up 7.25%. Palladium's up almost 11% here. And of course, crude oil just getting destroyed here. WTI crude down 17.5%, trading just over 93 a barrel. Brent right behind it, down 16 bucks, trading at about 91.70 a barrel. We've got natural gas is also down. A lot of commodities like your food, your grain are lower than
Gonna be all right.
But let's take a look at the oil chart. This is pretty interesting.
Let's go.
Look at this red candles here. The guys who piled into those levered long oil bets, trading the headlines around this conflict. 90.14 cents for WTI crude, down 17 bucks. That is a crazy candle here. We saw something similar a couple of weeks ago on that crazy Monday rally, 120 bucks.